Hello friends, welcome back for Bitcoin Technical Analysis with me, your friend, Rocky Outcrop. I hope you're doing really well out there. Thank you so much for tuning in today, and I would encourage you to hit that subscribe button if you haven't already. And of course, I really appreciate the people who hit the like button as well. So if you go ahead and hit that now for me, then brilliant. Okay, I'm just starting out on YouTube here. I'm not going to be like ashamed of asking for people to hit the like button. I mean, what the hell? So thank you so much as well. I really, really genuinely do appreciate it, because that's what we're all about here on YouTube, and I want to get as many people involved in this channel as possible and all that sort of good stuff, and that's thanks to you. So cheers. What we're going to be looking at in today's episode, I've written out here already. There's May the 24th there, and there's actually nothing really much to talk about, okay, so don't panic. We will be talking about a few things in this episode, but we'll keep it brief because really we've been over everything. And I was encourage you then to look back at yesterday's episode where we had a supplemental and we talked about the CME open and close, the gap, where you should be on the lookout for, and we asked what is this an Adam and Eve, and we looked at Bulkowski's pattern, talking about that and discussed it in a bit more detail, etc, etc. And if you want some more detail, then of course you can go back and look at previous videos like this one on May the 22nd, where we went through an awful lot in detail, and over here on the 21st we went through an awful lot in detail, and over here on the 20th where we went through lots and lots in detail, and that'll bring you right up to speed for where we are right now with the price action, because things haven't fundamentally changed really. They haven't changed in terms of the sort of the overall structure of what's going on. Now, we'll start off here and check out this and say, are we breaking this at the minute? Is this red candle, which is going down below this upward trending line here, as part of what could potentially be an ascending triangle or symmetrical triangle or whatever, as we discussed in previous episodes. In fact, since I just said symmetrical triangle and it started with ascending, I'll just move it around so you can see, So could this be it breaking it just now? And I would like to point out first off that the volume here, down at the bottom here, just in there, is nothing to write home about. Okay, so that doesn't look like sort of structure breaking volume. Fair enough. Overall, also we can see that during this whole period as well, there's still this diminishing volume. So fair enough. It looks like this is just kind of the beat going on. So I would be hesitant to say that that's what's happening right now. We can also look at the current price, 8,918. Let's jump over to the CME charts and remind ourselves where it closed, and it closed at 8,950. There's usually a premium on the CME chart. So currently, unless the prices drop another $100 or so, there won't really be a gap necessarily on here, and it's the type of gap, if there was one, that could get filled more or less within the first few hours of trading. We'll see how that pans out. So what is there to kind of talk about to kind of put things into context? Well, we mentioned, if you remember, if you're subscribed, and like I say, do subscribe. We do daily technical analysis, and I think it's pretty good stuff. We talked about this over here, this formation on the CME charts, and we've looked at the Bulkowski pattern for pipes and horn tops and that sort of thing over the last week or so. And we discussed, what would the shape of this, if this were to come down here, how would the pattern for that work? And this would be the measured move over here, because you can draw from the top of that down to where, this line would be at, and then you get, a measured move off the back of that. What's that similar to? Well, it's actually quite similar to the overall Adam and Eve structure. In fact, all of these sort of twin peak type top things all kind of work around the same sort of idea. In fact, almost all patterns work around the same sort of idea, where you have a measured move, and you look towards the top of the area where the pattern itself is happening at, and you take out a measuring stick, if you like, and you stick it in there, and you look down below, and this adds up. If this were to turn into an Adam and Eve pattern, then you could, it just depends how you want to describe that. If you want to say, oh look, well, there was actually a pipe at the top and it turned into an Adam and Eve, and then we dropped down, blah blah, that's up to you. The language is kind of secondary to the fact that you'd be accurate in terms of the pricing that you're talking about. Anyway, where does that take us to? And that would take us all the way down to fill in the gap that we have here at 7,500. And there's one other thing that I would like to reiterate as well, is that, and I wasn't necessarily clear enough about this, I looked back on the 1 hour chart throughout the year and saw that all of the gaps really on the 1 hour chart have been filled subsequently, from them being made all the way back to 2020. I didn't bother looking back any further than that, than January, since we started the channel here. Apart from a couple, and they're still on the charts, there's 2 hourly gaps which haven't yet been filled. One of them's down at 6,960, and the other one's down at $6,000. Okay, just so you know as well. And there's a gap, is another, I think it's a 4 hour gap down there at 3,500 as well, just so you know. But anyway, and if this pattern were to play out, then you would fill in this 7,500 gap. All that's fine, and ultimately as well, looking at this, it's like I say, these pattern things all kind of work around the same sort of basis. So if this was a symmetrical triangle, we broke out of it and came down, then you'd be looking at 7,500. If this is the Adam and Eve pattern, then actually the measured move for it is more or less the same. You go up from the peaks down to the neckline anyway on it, and then you'd be taking it from sort of the neckline down the way, and you'd be saying, well, it's not the neckline, it's the confirmation line just here at the bottom where the valley, the trough of the valley is. And that would take you all the way down to this, to just under 7,000. So that's what we're looking at. And of course, you wouldn't expect that to happen instantaneously, although it is crypto, so these things can happen instantaneously. But that's just so you'd be aware of that in the longer term. And then rather than just being a myopic pattern trader looking at just one thing only, then you can also look towards things like the VPVR and see that there's this volume coming back in this area. So you would expect and you can see this drop off here. So if prices were to break down below this area here, then you would see this drop off in the VPVR. So you could expect the prices to go down, and that's just ties in fairly well with all that. And there's other things as well to be aware of. Just like, for instance, if I just make this all fit on the charts a bit more, draw in a body to body Fibonacci, as you can see I'm going from this low here in March the 12th. Did I choose the wrong one? I did, sorry. Fib retracement. So draw in here. I'll draw over here to the right so we can see it a bit clearer, shall I? And then bring it up to here. And then you can see here that the 50% retrace is in that 7,500 level, and the 618 is down here at the bottom. So there's the two different choices, and like that kind of adds up in that sense. Of course, this could all break out towards the top side, but in the meantime, then we have another line here at 9,500, profit-taking line that you could be looking at. Now, I'm not financial advising, this is financial advice, but that's an area where you could easily, happily enough, take profits at. The subsequent line thereafter has got to be this downward sloping trend line at 9,800, and you can look towards your previous high as well over here at 10,000. And the reason why another way of another allegory for that or whatever is because if this was an ascending triangle and had a flatter top here, then that's also where that line would be coming in at, around about that 10,000 area. That's really all there is to look at in today's episode. And I really would like to say thank you for tuning in. There's a lot of hysteria that goes around, in the post-halving world, where people talk about things like the hash rate and talk about things like minor capitulation and everything else that goes along with it. And then they like to take a big macro view, stick it on the logarithmic chart, like take a big macro view. Like if I go up to the weekly chart, zoom right out. Maybe this is not the ideal chart to do this on because I've got those notes. Zoom right out, stick it on logarithmic. There's not enough history there. I'll go bitstamp again. Stick it up to yep, and sort of do this sort of thing, and put it all on the screen, and then say, oh look, there was a halving in here, big bull run, halving in here, big bull run thereafter, blah blah blah. And obviously that's not technical analysis. It's not helpful for traders. It's not. What we're still waiting for is the things for the market to come and actually give us a real idea of it, where it's actually going to go over the period of the next wee while, and we kind of just have to wait until, I think probably the looks of things, until we're into the next week so we can get a better idea. And if things do pan out to go on beyond the area, if we just go back down to the 24-hour chart actually here and hit auto, just to remind people, if things do break out below this area, and it's fair enough to say that this horizontal blue line here is in and around about where the support is of that symmetrical triangle, you could be looking at a descending broadening wedge, for instance. You could be looking up on the monthly chart. You could be looking towards us coming back down below this monthly trend line here, maybe retesting it or something like that, depending how things go. For instance, if we open up next month, and maybe we'll be as you can see, actually, maybe if this candle were to turn into a red candle and come down, maybe it could come down as far as 8,200, where we have that monthly trend line just there. But that's on logarithmic chart. You get the idea, though. So that's kind of, those are all the sorts of things that you could be looking at thereafter, should we get a bit more clarity about where the prices are going and what sort of thing is determining the current price action. Of course, we have this upward sloping channel here from all the way from March going all the way up here. We could actually, I suppose, hope for the prices to turn around at 8,500, as we've spoken about before, where you have this lower low previously, or this low here, which is whatever, this low here previously, and looking to see, whether or not we'd be breaking down past that. And of course, if you want to then just tie this up, we put another neat bow on things all over again and say, well, okay, so there's now a measured move off the back of this channel. Where does that take you down to? It takes you down to that sort of 7,000 area again, you know, the 50% retrace, and that puts you more or less between the 50% retrace, depending on how you draw it in, but the 50% retrace level, or maybe the 618 thereafter, you know, but in that 7,300, 400 area, you know, and you know, that's just, it depends. Just like pick your poison, really, you know. So we're waiting to see how things pan out. And if you're curious as well as to why, say you've just joined the channel here for the first time, please again, like, subscribe, all that jazz. Why I've got these two lines on here. That was a discussion that I've been having for a wee while, where I expected the volatility to come back in, as we saw that kind of panned out more or less correctly. And that's at the same time as we're going to see a dramatic upward slope in terms of the CME 50 simple moving average. As we can see here, that's currently underway, as well as these two moving averages come together, you know. And we could, and as well, just looking at this generally speaking, symmetrical triangle breakout takes us all the way down to the 50 simple, you know. This Adam and Eve breakout takes us down past the 50 simple, down towards, you know, this potential next hourly gap fill you could have maybe at 6,900 if it were to just go down and wick up and stuff like that. So there's plenty of things to be looking at in terms of where we could be going next if we would get to the point where that's a clear decision. I had somebody ask me on Twitter earlier on, would you go long from now? And it's just like, you know, these sorts of reductionist questions, you know, would you go long from now? Are you expecting it to dip, or for it to dump more? You know, that was the question that they asked. And just looking at the price action, they're asking, you know, would you go long from here, or are you expecting it to dump more? And I think that that's a far too, you know, simplistic question to ask, and really overall, and that really you'd have to look at the bigger picture. And that's what we've been doing over the last, you know, that's what we always do on this channel. So like and subscribe, and yeah, I'll catch up with you again tomorrow. We'll see how things pan out on this one. Overall, thank you so much as well, by the way. If you are just new here to the channel and you're wondering what my last sort of thing I said to anybody to do was, well, I said to go short and around, you know, around about these areas here, and that you'd be taking profit in around about these areas here, because this was the obvious move to be made, and that's the next stage now that we're waiting to see how that's going to happen, if we're going to go down or up or down or not. You know, that it's not this dump here which is the crucial one, it's the next bit. Thanks very much for tuning in. I'll catch you in the next episode. Really much appreciated.